Hey everyone, welcome back to Corporate Decoder. Today we're diving into Nasdaq's annual report, and let me tell you, there are enough numbers in here to make your head spin faster than a day trader on meme stocks. We'll try to make sense of it all without needing a PhD in finance or becoming a market wizard. Prepare to find out if this stock is about to fly high or if it's time to bail out, folks. Nasdaq, when they say we, us, and our, they are talking about Nasdaq, the whole company. Throughout this report, we're going to try to avoid getting lost in the jargon, but there are many acronyms including ARR. ARR means annualized recurring revenue. This shows the money they expect to continue making regularly each year. We also see EBITDA. EBITDA is earnings before interest, taxes, depreciation, and amortization. It's a way to look at a company's profitability without some of the confusing financial stuff. Now, before we get started, a quick heads up. This report contains forward-looking statements which are basically educated guesses about the future. We have to remember that these guesses come with risks, and it is important to be aware of these. So don't take everything you read here as gospel. This is Nasdaq's story, and we will just take a look at the numbers. First up, what exactly does Nasdaq do? Simply put, it's a tech company for the financial world. They provide platforms, data, and services to pretty much everyone in the financial industry, from big corporations to individual investors. They run exchanges where stocks are bought and sold, and they also offer technology to help companies manage risk and comply with regulations. So what's their game plan? Nasdaq is aiming to be the go-to provider of technology for the global financial system. To do so, they are focused on key values like liquidity, transparency, and integrity. They plan to keep modernizing markets with new technology. They want to keep helping corporate clients and investors make informed decisions. They want to keep protecting the integrity of the financial system. Let's talk about how Nasdaq makes its money. First is their capital access platform segment, which focuses on data and listings. Nasdaq sells market data to all types of investors, from big firms to casual traders. They also run various stock exchanges like the Nasdaq stock market, as well as some Nordic and Baltic exchanges. In 2024, they saw 180 operating company IPOs and 50 SPAC IPOs. Also, 17 companies switched their listings to the Nasdaq stock market. The company is trying to get companies to list shares on their exchange. Next is the index business. This segment develops and licenses Nasdaq-branded indices. As of the end of 2024, there were 401 ETPs around the globe that tracked a Nasdaq index. That's a big number. Workflow and insights includes analytics and corporate solutions. The analytics business provides asset managers and institutional investors with information to make better investment decisions. The corporate solutions business helps companies with things like investor relations, board management, and sustainability reporting. The financial technology segment aims to modernize markets by utilizing technology. This includes financial crime management technology, regulatory technology, and capital markets technology. Financial crime management technology includes Nasdaq Verifine, which is used for detecting fraud and preventing money laundering. Regulatory technology includes Accession SL and surveillance solutions. Accession SL assists banks and other financial institutions with regulatory reporting and risk management. The surveillance solutions help firms comply with market regulations. Capital markets technology includes Calypso, market technology solutions, and trade management services. Calypso provides trading, risk management, and collateral management services. The market technology solutions are used by exchanges and other market operators around the world. The market services segment includes equity derivative trading, cash equity trading, and fixed income trading. Nasdaq operates exchanges in both the US and Europe, where stocks, options, and other financial products are traded. Nasdaq commodities offerings include derivatives in power, natural gas, carbon emission markets, seafood, and electricity certificates. In January 2025, a new deal was made to transfer open Nordic power derivatives positions to another exchange. The sale of the Nordic power trading business was stopped. What gives Nasdaq an edge? The short answer: technology. They have invested heavily in cloud computing, AI, and other cutting-edge technologies. They are using AI to enhance current products and services. They are also trying to use AI to drive internal operating efficiencies. This should enable them to modernize markets with the SEC approval of the first AI-powered order type. Nasdaq is partnering with Amazon Web Services, AWS, to move its exchanges to the cloud, which they believe will improve performance and flexibility. Nasdaq is a tech company that is focused on clients. They deploy robust technology capabilities and have developed innovative solutions to further address client needs across the financial ecosystem. The competition is fierce, and Nasdaq faces challenges from other exchanges, data providers, and technology companies. These challenges are present across all different product offerings, especially listing services. The primary competitor in larger company stock listings in the US is the NYSE. For financial crime management technology, competitors include core banking solution providers, fintech startups, and in-house custom builds. As regulatory reporting becomes more time sensitive, the ability of Accession Number to operate with speed at scale sets it apart. In the market services segment, Nasdaq faces competition from Cboe Global Markets, Intercontinental Exchange, and many multilateral trading facilities. Intellectual property is key to the company. They have a lot of different kinds of marks and patents to protect their competitive advantage and ensure that they maintain their business objectives. Nasdaq invests in emerging fintech companies through a corporate venture program. The program has invested in companies covering various sectors, including blockchain, data, and enabling technologies. Nasdaq is committed to making the world a better place. Nasdaq publishes reports on its website that describes all its ESG policies. They want to be carbon neutral and are working towards short and long-term net zero science-based targets. Nasdaq is subject to heavy regulation, especially in the US. The SEC has the power to step in and enforce regulatory action at any time. Nasdaq's exchanges must get approval for proposed changes to their rules, practices, and procedures. Rule changes will impact the structure of Nasdaq. Regulation of Nasdaq Canada is performed by the Canadian Securities Administrators. As an exchange in Ontario, Nasdaq Canada must comply with exchange recognition orders. Regulation of the European Union affects Nasdaq's European trading business. Nasdaq has a strong local presence in each jurisdiction in which they operate regulated businesses. Nasdaq seeks to continue creating a positive work environment for its employees. A hybrid model is in place following the COVID pandemic. In 2024, the internal employee engagement score reached a record high of 80% favorable. The global female employee base in 2024 was approximately 36%. Minority representation in the US was 33%. They have increased programs to amplify diversity and inclusion. Their total rewards program is designed to attract, retain, and empower employees to successfully execute growth strategies and better serve clients. Through Nasdaq GoodWorks, Nasdaq has committed to supporting the communities in which they live and work by providing eligible full and part-time employees with 2 paid days off per year to volunteer. Here is a summary of what Nasdaq considers the major risks to their business. Economic conditions like recessions could reduce demand for their services. They have to keep up with rapid changes in technology. System failures could disrupt their business. Competition in the financial markets is fierce. And of course, there's always the risk of a cyber attack. A lot of the risk factors in this report talk about Nasdaq's ability to grow. One is that they might not be able to successfully integrate acquired businesses. It is costly and it may lead them not to achieve the synergies that they hoped for. One area of high importance is cybersecurity. A successful hack may be the biggest threat to Nasdaq's existence. Nasdaq is in the global market and is more likely than other companies to be a target of such events. Now, the big risk is technological change, which is very important to their success. Nasdaq's clearinghouse operations could be exposed to credit and liquidity risks, including defaults by clearing members. Nasdaq notes that they depend on cash flow from their subsidiaries. If anything restricts the ability of these subsidiaries to pay dividends, then Nasdaq will find themselves in trouble. All in all, Nasdaq seems to be taking a proactive approach in cybersecurity. In addition, they conduct extensive cybersecurity assessments of their acquired entities. Alright, let's dive into some numbers. Looking at the year-end summary, revenues less transaction-based expenses were up 19.4%. Operating income increased 13.9%. Net income attributable to Nasdaq was up 5.5%. Diluted earnings per share down 7.4%. A decrease in diluted earnings per share with an increase in net income attributable to Nasdaq is primarily due to an increase in the amount of shares outstanding in 2024. Cash dividends declared per common share was up 9.3%. Looking at the financial technology segment, it delivered more than 10% ARR growth, reflecting an increase in new clients, cross-sells, and upsells. Nasdaq secured a good IPO win rate in 2024. Nasdaq achieved an 82% win rate among Nasdaq-eligible IPOs in the US, representing 180 deals and $23 billion in total proceeds raised. Their value proposition includes providing data, tools, and insights that drive sound decision-making while complying with evolving regulatory requirements. Annualized recurring revenue increased from $3.096 billion at the end of 2023 to $3.321 billion at the end of 2024. We have a look here to see how well they are retaining subscription revenue. Revenues from the capital access platform segment totaled $1.972 billion. Financial technology totaled $1.621 billion. Market services totaled $3.771 billion. Global female employee base in 2024 was 36%. Minority representation in the US was 33%. A diverse team with equal opportunities. A reduction in trading volumes or values market share of trading, the number of our listed companies, or demand for our products and services due to economic conditions or other market factors could adversely affect our business, financial condition, and operating results. During 2024, there was more of a transition for operating companies to join the Nasdaq stock market. Data is sourced internally and may be different from publicly available information. Nasdaq is subject to market risks such as interest rate risk and foreign currency exchange rate risk. Nasdaq notes that a downgrade of their credit rating could increase the cost of their funding. The company notes that as regulatory reporting becomes more time sensitive, the ability of their platform to operate with consistency across functional business domains continues to set Axiom SL apart. Alright, now let's zoom out and get a broader picture of Nasdaq. Nasdaq is well positioned as a key player in the global financial technology space. Their investments in technology like AI and cloud computing are likely to strengthen their offerings and lead to further innovation. However, they operate in a competitive industry and are subject to economic risks, particularly any potential loss of trading volume. Let's talk basic valuation. Nasdaq currently trades at a PE ratio of around 25. That means for every dollar the company makes, investors are willing to pay $25 for the stock. It can be a tad high compared to other companies in the financial sector. Using these numbers, a reasonable target price range would be $65, $80 based on expected growth and market conditions. I'd lean slightly bullish here, especially since the company is in a high growth sector. Overall, Nasdaq's future seems bright, but like any investment, it's not without risk. They just might not be worth what people are paying right now. This was Corporate Decoder. Make sure to subscribe for more simple explanations about complicated companies.